The price of gold and silver has fallen sharply after reaching record levels, raising questions about the sudden shift in precious metal markets. Earlier this week, gold climbed to a historic high, hitting $5,600 per ounce on Thursday, while silver was trading at $120 per ounce. These levels represented some of the highest prices ever recorded for the two metals. However, the surge was short-lived. Soon after reaching these peaks, precious metal prices began to fall rapidly. By Friday evening, the price of gold had dropped significantly, falling to $470 per ounce, marking a dramatic reversal from the highs seen just one day earlier. This sudden movement followed a period of intense activity in global gold markets. At the beginning of 2026, interest in gold reached what many described as a fever pitch, with prices hitting new records earlier in the week. Across different parts of the world, individuals lined up to sell bullion they already owned or to purchase gold for the first time. Many consumers went to local retailers to cash in their gold jewelry, taking advantage of the high prices to convert personal assets into cash. At the same time, other buyers entered the market, purchasing gold coins or bars as a form of investment. Some investors also chose to gain exposure through exchange-traded funds, which allow people to trade the value of gold in a way similar to trading shares on financial markets. The surge in gold prices was especially visible in the United States. On Wednesday, the price of gold on the spot market in New York reached a new record high of more than $5,418 per troy ounce. The troy ounce is the standard measurement used for precious metals, and this figure represented a historic milestone. However, after reaching that peak, prices began to decline. By Friday afternoon, futures prices had fallen below $5,000 per ounce, a move that some market observers said could signal a broader correction in the precious metals sector. The rapid shift highlighted the volatile nature of gold, a commodity that has long been considered both a safe haven and a highly unpredictable asset. The fluctuations in gold and silver prices became even more pronounced following reports that President Donald Trump would appoint former Federal Reserve official Kevin Warsh as the next governor of the United States Central Bank. News of this potential appointment was reported to have leaked, and the reaction in financial markets was swift. Precious metals, which often respond to political and economic developments, showed increased volatility as investors reacted to the possibility of changes in U.S. monetary leadership. The announcement added another layer of uncertainty to markets that were already experiencing dramatic price movements. Despite the sharp decline seen at the end of the week, gold prices remained significantly higher than they were 1 year ago. At this time last year, the spot price of gold in New York was less than $2,795 per troy ounce. The current levels, even after the drop, reflect a substantial increase over that period. This comparison highlights how much gold has gained in value over the past 12 months, even accounting for recent losses. The dramatic rise and fall in gold and silver prices has drawn attention to the underlying factors driving investor behavior. One of the key reasons cited for the recent surge is uncertainty. Historically, interest in buying gold and other precious metals such as silver tends to increase during periods of instability and turbulence. When economic, political, or geopolitical conditions appear uncertain, investors often turn to gold as a way to preserve value or protect wealth. This pattern has been observed repeatedly in the past, and recent developments appear to follow the same trend. Gold prices previously spiked worldwide during the height of the COVID-19 pandemic, as global markets faced unprecedented disruption and uncertainty. Similar movements were also seen amid ongoing wars and turmoil linked to President Trump's tariff policies. In each of these situations, concerns about economic stability and global trade encouraged investors to seek refuge in precious metals. The latest records in gold prices have coincided with escalating geopolitical tensions in Venezuela and Iran, as well as President Trump's repeated calls for a United States takeover of Greenland. His increasingly aggressive stance toward America's allies has also contributed to heightened uncertainty on the international stage. These geopolitical developments have created an environment in which traditional assumptions about global stability are being questioned. According to Daniel McDowell, a professor of political science at Syracuse University, there has been what he described as a real breakdown in the way people think about how the world order works. Speaking to the Associated Press, McDowell explained that during moments of instability, buying gold has historically been a psychological reaction for some individuals who are seeking a safe place for their money. This perspective reflects a broader understanding of gold not just as a financial asset, but as a symbol of security in uncertain times. The latest demand for gold, as well as its recent decline in value, has also occurred alongside the weakening of the US dollar. Changes in the strength of the dollar can have a significant impact on precious metal prices, as gold is typically priced in dollars on international markets. When the dollar weakens, gold often becomes more attractive to investors using other currencies, which can push prices higher. Conversely, shifts in currency strength can also contribute to price corrections, as seen in the recent downturn. In addition to currency movements, questions have emerged about the future independence of the Federal Reserve. President Trump's nomination of former Fed official Kevin Warsh to lead the central bank has raised concerns among some observers about the potential direction of U.S. monetary policy. The appointment could signal a shift toward greater White House influence over the Federal Reserve, which has traditionally operated with a high degree of independence from political leadership. This possibility has added to market uncertainty as investors consider how changes in central bank leadership might affect interest rates, inflation, and overall economic stability. The combination of geopolitical tensions, currency fluctuations, and potential changes in U.S. monetary policy has created a complex environment for precious metals. Gold and silver, which are often seen as safe havens, have experienced dramatic price swings as investors respond to rapidly changing conditions. The record highs reached earlier in the week demonstrated the strong demand for these assets, while the sudden drop by Friday evening highlighted how quickly sentiment can shift. As markets continue to adjust, the recent movements in gold and silver serve as a reminder of the unpredictable nature of commodity prices. While gold remains significantly higher than it was a year ago, the sharp decline from record levels underscores the risks associated with investing in volatile assets. For many investors, the events of this week illustrate how global uncertainty, political developments, and economic policy can converge to produce rapid and dramatic changes in financial markets. This opening phase of the story sets the stage for a deeper examination of the forces driving precious metal prices. The record highs, followed by a swift correction, reflect not only investor behavior but also broader shifts in the global economic and political landscape. As the situation continues to evolve, the focus remains on understanding how these factors interact and what they mean for the future of gold and silver markets. The developments in gold and silver markets this week unfolded against a backdrop of heightened global uncertainty, which has played a central role in shaping investor behavior. As precious metal prices surged earlier in the week, the trend reflected a growing sense of unease across international markets. This uncertainty has been driven by a combination of economic pressures, political developments, and geopolitical tensions, all of which have contributed to renewed interest in gold and silver as assets perceived to hold value during unstable periods. In recent years, gold has consistently demonstrated its role as a preferred store of value during times of crisis. This pattern became particularly evident during the height of the COVID-19 pandemic, when gold prices rose sharply worldwide as financial markets faced unprecedented disruption. Investors sought stability as economies experienced shutdowns, supply chains were interrupted, and governments introduced large-scale fiscal measures to manage the crisis. The rise in gold prices during that period established a clear link between global instability and increased demand for precious metals. A similar dynamic has been observed in the context of ongoing wars and economic uncertainty related to President Donald Trump's tariff policies. These tariffs, which affected trade relationships between the United States and several major economies, contributed to volatility in global markets. As trade tensions increased, investors responded by shifting capital toward assets traditionally considered safe, including gold and silver. The current surge in precious metal prices followed this same pattern, reflecting continued concern about the stability of international economic systems. The most recent record levels in gold prices coincided with a series of geopolitical developments that further heightened global uncertainty. Escalating tensions in Venezuela and Iran have been among the key factors contributing to market unease. These regions have been at the center of international political disputes, and any escalation in such conflicts tends to affect global financial confidence. At the same time, President Trump's repeated public calls for a United States takeover of Greenland added another unusual element to international relations, drawing attention to shifting diplomatic priorities and strategies. In addition to these developments, President Trump's increasingly aggressive stance toward America's allies has also influenced market sentiment. Diplomatic relationships play a significant role in maintaining economic stability, and when tensions arise between major global partners, financial markets often react. The combination of strained alliances and unpredictable policy statements has created an environment in which long-term economic assumptions are being questioned, further encouraging investors to seek refuge in assets such as gold and silver. According to Daniel McDowell, a professor of political science at Syracuse University, these conditions reflect what he described as a fundamental shift in how people perceive the global order. Speaking to the Associated Press, McDowell said there has been a real breakdown in the way people think about how the world order functions. He explained that during moments of instability, buying gold has historically served as a psychological response for individuals seeking a secure place to protect their money. This perspective highlights that gold's appeal is not solely based on financial calculations, but also on emotional and psychological factors linked to uncertainty and fear. This psychological dimension has played a significant role in driving the latest wave of demand for precious metals. As news of geopolitical tensions and political developments circulated, investors responded by increasing their exposure to gold and silver. For some, this meant purchasing physical assets such as coins, bars, or jewelry. For others, it involved investing through financial instruments like exchange-traded funds, which allow individuals to trade the value of gold without owning the physical metal. These different forms of investment collectively contributed to the rapid rise in prices seen earlier in the week. However, the same factors that drive prices upward can also contribute to sudden corrections. The recent decline in gold and silver prices occurred after a period of intense speculation and buying activity, suggesting that market sentiment can shift quickly. When investors react to new information or reassess existing risks, prices can move sharply in either direction. This volatility is a defining characteristic of precious metals, which are influenced by a wide range of economic and political variables. One of the key economic factors affecting gold prices in recent days has been the weakening of the United States dollar. The value of gold is closely linked to currency movements, particularly the dollar, as gold is priced internationally in U.S. currency. When the dollar weakens, gold typically becomes more attractive to investors using other currencies, increasing demand and pushing prices higher. The recent weakening of the dollar therefore played a role in supporting the earlier surge in gold prices. At the same time, the decline in gold prices also coincided with growing questions about the future independence of the Federal Reserve. The Federal Reserve, which serves as the central bank of the United States, has historically operated independently from political influence. This independence is considered essential for maintaining stable monetary policy and managing economic conditions effectively. However, recent developments have raised concerns about potential changes to this arrangement. President Trump's decision to nominate former Federal Reserve official Kevin Warsh to lead the central bank has been a key factor in these concerns. The nomination has been interpreted by some as a signal that the White House may seek greater influence over monetary policy. While the article does not provide further details about Warsh's policy positions, the mere possibility of increased political involvement in central banking has contributed to market uncertainty. This uncertainty surrounding the Federal Reserve's future direction has added another layer of complexity to precious metal markets. Investors closely monitor central bank decisions as these influence interest rates, inflation, and overall economic stability. Any perception that the Federal Reserve's independence might be reduced can lead to changes in investor behavior, particularly in markets that are sensitive to economic policy, such as gold and silver. The interaction between political developments, economic conditions, and investor psychology has therefore been central to the recent movements in precious metal prices. The rapid rise in gold and silver earlier in the week reflected strong demand driven by uncertainty and geopolitical tensions. The subsequent decline highlighted how quickly markets can respond to new information and shifting expectations. Despite the recent drop, the broader context shows that gold remains significantly more valuable than it was a year ago. This long-term increase reflects sustained interest in precious metals as a form of financial security. However, the sharp fluctuations observed in recent days demonstrate that gold is not immune to volatility, even when underlying demand remains strong. The events of this week illustrate how interconnected global financial markets have become. Political statements, diplomatic tensions, currency movements, and central bank decisions all contribute to shaping investor sentiment. Gold and silver, which are often viewed as safe havens, have responded to these influences in real time, producing dramatic changes in price within a very short period. As investors continue to navigate an uncertain global environment, the behavior of precious metals provides insight into broader economic and political trends. The surge and subsequent decline in gold and silver prices serve as indicators of how markets react to instability, uncertainty, and shifting expectations. These developments underscore the complex relationship between global events and financial markets, highlighting the ongoing role of precious metals as both financial instruments and symbols of economic security. This opening phase of the story sets the stage for a deeper examination of the forces driving precious metal prices. The record highs, followed by a swift correction, reflect not only investor behavior but also broader shifts in the global economic and political landscape. As the situation continues to evolve, the focus remains on understanding how these factors interact and what they mean for the future of gold and silver markets.